Hey guys, welcome to the channel. I'm Sheen, your host. This is Money Matters. In this channel, we talk about money, finance, how to grow your money, how to invest your money, how to make money work hard for you. Guys, please consider subscribing. I'm pushing over 4,000 subscribers. So on my march to 5,000, thank you guys so much for subscribing. I think like 80% of people that watch my videos never ever subscribe. So please, if you've watched more than one of my videos and you found some value in my videos, consider subscribing. It really helps out the channel, helps me out tremendously. Give me a thumbs up. That also pushes my videos to more and more people, helps my channel grow. Appreciate it very much. Thank you guys so much. Today we're going to talk about two stocks. First is going to be LCA, Golden Nugget, and I'm going to have a follow-up about GreenPower Motors. I talked about stock dilution in my previous video, and a lot of people are getting concerned. What's going on? What's the 7-1 split? What's this new shares coming out on the market? And people are getting all uptight about this situation. So we're going to talk about exactly what's going on. So make sure you watch to the end, because I'm going to put the GreenPower stuff at the end. So let's get started. First of all, this is Golden Nugget online gaming. So this is LCA currently. It is going to merge with LCA is going to merge with Golden Nugget online gaming, and it's going to trade under GNOG after the merger. So here it is. I put this video out about a month ago. It didn't get a lot of views, only 1.7 thousand views. So if you still want to know my full analysis on it, that video is still relevant today. So check out that video if you want to know the full analysis. I'm not going to go over that in this video. It'll just take too long. So this is LCA stock chart closing today, closed at $16.16. It was up 1% today. 5-day performance up 13%, and the 1-month performance up 28%. And there you go. There is my trademark rocket. That is what I think is going to happen with this stock. It's starting to take off because the merger is starting to come. It's probably going to be at the end of September. So when I first put out this video and when this first merger was announced, a lot of bad press came out about this merger, and I don't think this Golden Nugget online gaming is getting the press, the attention that it deserves, just because of Tillman Fertitta being the owner of both companies. And so people are getting so caught up in that fact. And there was a couple of articles put out. I'm going to go over the articles. So this is one of the articles, and this is basically the article that everyone points to and everyone talks about why it's shady and why they're staying away from this one. So Lancadia's Golden Nugget online gaming deal is golden for Tillman Fertitta. So he is the owner of Landry's, the restaurant chain, the owner of Houston Rockets. He's multi-billionaire. He owns Golden Nugget, the online casino, and the physical casino, and he just happens to own Lancadia Holdings, which is a SPAC company. So this guy's a billionaire. He owns tons of things. So the controversy is that he is using his own company to basically buy out another one of his, or merge with another one of his companies. And in this transaction, he's going to pocket a good amount of money. He's going to pocket about $30 million, just lining his pocket. And a lot of people look at that and say, oh, he's just doing it to make money, and then put the debt of Golden Nugget on the investors. So Tillman Fertitta took $300 million loan to help his entertainment empire during the illness situation. That $300 million loan is being absorbed by the new entity, one of the smallest pieces of Fertitta Entertainment. $57 million in revenue out of $5 billion. Half the loan will be paid by the cash in the SPAC trust, while the other half will be assumed by the merged LCA Golden Nugget Gaming. So basically, he took out $300 million loan to help his other companies survive, which is basically all his restaurant chains. The whole illness situation has taken out the restaurant industry. So he took out a $300 million loan to keep his company, keep his Landry's empire afloat. So now what he's doing is merging Lancadia with Golden Nugget, and during this merger, he's going to pocket, number one, he's going to pocket $30 million. That's in the next paragraph. But number two, some of this debt that he's acquired from that $300 million is going to go on the balance sheet of the new Golden Nugget company. So yeah, he's making billionaire moves, but at the end of the day, he is still the owner and CEO of all these companies. He's not getting rid of it. He's not selling it off to somebody. He's not selling the company. And Golden Nugget Online Gaming, I'm gonna show you in a minute. It is a cash cow. It is the only company that he has that is making money. So he's not going to get rid of this. It's his baby. He's going to baby it because it is the only company that is producing for him right now. Okay, so the last paragraph. So the deal appears to be more about bailing out Fertitta Entertainment than anything. Just the annual interest savings on the $300 million will be greater than the 7 years of net profit from the online company, and the debt will weigh on Golden Nugget Gaming path to profitability, given it comes at 14%. So this article is just not 100% correct. Number one, Golden Nugget Online Gaming, there is no path to profitability. They are already profitable right now. Okay, so out of that 322 million cash held in trust, here's what we see. We already know 150 million is going towards debt repayment. Another 24 million goes to debt repayment fees. So in reality, 174 million in cash is going towards debt inherited from the huge parent company. As if that weren't enough, 30 million cash goes towards Golden Nugget's parent, Fertitta Entertainment. That's right. Tillman Fertitta is going to get 30 million check to have his SPAC he controls by a company he controls. Finally, another 30 million will go towards transaction fees. That leaves 88 million in cash and 150 million in debt at a ridiculously high interest rate for the new company. So that is the whole issue that people have with this. That number one, Tillman Fertitta is pocketing $30 million from this deal. Number two, the $300 million that he got a loan for his Fertitta Entertainment empire, he is putting a portion of that into his other company, which is going to be Golden Nugget Online Gaming. That's going to go on the balance sheet, and that is going to be on the company. And if you invest in this company, you're taking on that debt as well. And like I said right here, so what? This company is a cash cow. It is profitable. It is making tons of money, and it is only operating in one state. So imagine what's going to happen when it operates in 2 and 3 more states, which is going to be Pennsylvania and Michigan coming in 2021. So in this slide, it says right here on the second paragraph on the left, so it was profitable since 2016. So again, this company is already profitable. So like that article previously said that they didn't have, it was going to disrupt their path to profitability. But that just doesn't make sense. This company is already profitable. Since 2016, it's been profitable. I think it was this company, so this online gaming portion of Golden Nugget, which is separate from their physical casino. These are 2 separate companies. Their online gaming portion is the one that investors are going to get with this deal. So this company, this part of it was launched in 2013. In just 3 years, in 2016, it became profitable and is still profitable today. There is no path to profitability. The profitability is already happening today. So this is their profitability chart. Net revenue, you'll see in 2016 was 18.2 million, 2017 27 million, 2018 43 million, 2019 55 million, and that is on their bottom line net profit. All right, so this is their Q2 2020. This is the heart of the illness situation. Things are shut down. The economy is the worst that's ever been. So in the heart of this whole pandemic situation, they put up these numbers. Okay, Q2 2020 gross gaming revenue 28.2 million came in 85% higher than the 15 million that was accomplished in 2019. Net revenue, meanwhile, so that was on their bottom line, 85% year over year on their top line. Net revenue, their bottom line was 24.8 million compared to 13.9 million for the same period in 2019. So on their bottom line, net revenue is 78% year over year. Operating income 8.5 million versus 4.9 million in the second quarter of 2019, making a 74% increase. So Thomas Winter, the senior vice president, this is his statement. Our second quarter beat our target, supported by record player activity and average revenue per user. Our online play has remained strong in July and into August, and we are confident that we will exceed our revenue and operating forecast in New Jersey this year. Expanding our operations to Pennsylvania and Michigan. All those numbers, all that revenue, that is from one state in New Jersey. That's the only state they're currently operating in, but they're going to expand to New Jersey and Michigan in 2021. And then from there, I think a lot of states are going to start opening up when they start seeing the revenue, the taxes that this brings in for New Jersey, Michigan, Pennsylvania. It's just going to be, I think, one domino after another. Another state's going to fall in line, because realistically, this whole situation that's been happening now, states are going broke. Big states like California, they're already broke. Big states like Texas, they want that extra revenue. They want those extra taxes. So I think my opinion, who knows what's going to really happen, but my opinion is that this money is just too good and too easy for states to pass up. Online gaming, I remember like 10, 15 years ago when online poker was huge. I was an online poker player for a few years, and I remember that was a huge market, and it was basically outlawed for the past 10 years. And now this online casino, online gaming, online poker, things like DraftKings, sports betting, it's still in its infancy, and it's starting to happen right now in 2020 and into the future. So I think this is going to be massive, and people are not really paying attention and not really getting involved. It's the same feeling that I got when I bought Tesla when it was like $400, and I bought it when it was $700, and I bought it when it was $1,400. And people were saying, "Dude, you're crazy. You're insane to be buying it at that high of a price." And what I'm saying is, no, you don't understand. This is going to be massive. And people just don't listen. They just don't understand. They don't want to understand. And I feel like the same thing is happening with this online gaming thing. So this is their chart. And so this is their projected revenue. Okay. So in 2020, this was their projected revenue. This came out before. This came out in June. So their projected revenue for Q2 2020, they projected 27 million. And they actually beat that. They did 28 million. I think it was actually 28.2 million. So Q2 of 2019, they did 15 million. In Q2 of 2020, they did 28.2 million. Again, that is beating their own projections. This is the map of the United States where online gaming, online casinos are still illegal, which is pretty much most of the United States. Only a handful of states are somewhat legal and somewhat gray area. But like I said, there's going to be 3 states that are going to be 100% legal. Again, that's New Jersey, Michigan, and Pennsylvania in 2020. Here's my personal position on this. I am up 4.89%. I have cost basis of $15.25. So guys, that is my presentation. That is my follow-up on Lioncadia Holdings, Golden Nugget Online Gaming. Check out my previous video. All of that is still relevant if you are interested in Golden Nugget. I also have a clip in my old video where I show you how they do online like face-to-face video blackjack. It's absolutely amazing. It's like, they have a screen and you could see the dealer, you could interact with the dealer, you could type and chat with the dealer, and the dealer communicates, and it's just like FaceTime, Zoom, but it's you could place bets, real live money bets. It's absolutely amazing, the platform that they have. The other thing is that this is not like a physical casino. A physical casino, if you want to expand, you have to get more licenses, get more construction, build out bigger buildings, bigger facilities. This online gaming, just to expand, all they need to do is get a few more customer service, expand their licenses to the different states, but everything else is software. All they just need to get some more servers. There's not a lot of overhead with this, so you can see this scaling massively. This is a complete software play. Once they have the platform, they already, like they do already now, all they have to do is, again, get more people signed up, get more servers, and get more customer service. The very, very low overhead for this business model. All right, guys, so that's all I have to say about Golden Nugget LCA Online Gaming. Not financial advice, but I would take a look at this one really seriously. It will be merging, I believe, sometime at the end of September. So after it merges, I think this could at least double up. So it's like $16, $15 right now. So I expect it to be at least $30, if not $40 to $50. So that's it. So I have another stock to talk about. Super hot stock. It was up like 80% yesterday. Today it crashed down to, I think it was negative 18% today. So volatility as expected. This stock, you're going to see massive volatility. So if you can't handle it, you shouldn't get into it. So this is GreenPower Motor Company. It's trading currently in the United States as GPVRF. And so here's the news that came out on it, and a lot of people are getting confused. A lot of people don't know what to do. The stock crashed, I think, 18%. A lot of people, even in my own comments, have said that they sold out. They got scared. They got rid of it. So let me talk about what's going on, and so hopefully you guys get an understanding of what's going on and makes you feel more comfortable about a position that you want to open or a position you currently have. So I said in my previous video, if you haven't watched that video, please check out the video. I said if you could get this stock under $2, it's a good get, it's a good buy. But as soon as it's over $2 and if it's into the $3 range, personally, I would say stay away from it because of a few reasons. One of them, I said, was massive dilution coming. And sure enough, today, announcement was made that they are diluting shares. Just like I predicted, just like I said, like 2 days ago, that's what I said. Dilution is happening. So they're also doing a reverse stock split, a 7-to-1 reverse stock split. So let's read this. So today announced launch of its initial public offering in the United States. 1.5 million common shares pursuant to a registration statement filed with the SEC. GreenPower expects to grant the underwriters a 30-day option to purchase an additional 225,000 common shares. So if you add that up, 1.5 million plus 225,000, you get 1.7 million. So that is the dilution right there. 1.7 million additional shares being added into the market. So that's a little bit of dilution. There's more dilution coming. But for now, we're just talking about this 1.7 million dilution from being listed into the NASDAQ, their IPO into the United States market. So They're going to trade under the NASDAQ symbol GP. That is their new symbol after this happens. It is no longer going to be GPVRF. It'll be GP. So in connection with this offering, GreenPower intends to effect a consolidation of its common shares on the basis of a new one common share for 7 old common shares. So that's the 7-1 reverse split. So a reverse split is basically if you have 7 shares, they're going to be taking away 6 shares and you only have 1 share. So it's the opposite of what's happening with Tesla. Tesla is doing a 5-to-1 stock split. So if you have 1 share, you're going to have 5 shares. In this case, if you have 7 shares, you're going to be bumped down to only 1 share. But the price is still the same. If you have 7 shares and they're all worth $1 each, you have $7 worth of shares. After this reverse stock split, you're only going to have 1 share, but that 1 share is going to be worth $7. So the value is the same. You're not losing anything. You're not gaining anything. So don't be selling your stocks thinking that they're going to take away some of your stocks, and you're trying to get rid of it now. That's not the move to make. So this doesn't mean anything. No value. The only reason that they're doing this is because right now they're trading at let's just say $2-3 range, right? So in order to be listed on the NASDAQ, I forgot what the minimum is, if it's $3 or $5, I forgot. But they need to be getting out of the penny territory. They can't be trading at $2-3. They're not going to be listed on the NASDAQ. There's a requirement that the stock price has to be a certain amount in order to be listed on the NASDAQ. And so that's the only reason they're doing the stock split, is to bump up their price up to, it's probably going to be up to $21 or something. So it's whatever the price is now times 7. So they're going to be bumped up to about $21 to $28, and so that the only reason they're doing that again is to get out of penny territory. They're not going to be a penny stock because penny stocks are not allowed to trade on the NASDAQ. So in this particular situation, it is good news that they're doing a reverse stock split. Again, it's just because they want to get listed on the NASDAQ. It's just because they want to be available to the American market. But the times that it's not good to do a reverse stock split is basically when your stock is worthless and you are just trying to pump up the price. And penny stocks are companies that are about to get delisted because their stock is too low. They would also do a reverse stock split, but that is for a bad reason because they're trying to avoid being delisted on the NASDAQ. But in this case, it's the opposite. They're trying to get listed on the NASDAQ and they're trying to IPO. So that's why they're doing a reverse stock split. So in this particular situation, it is good news. We want this as an investor. We want this. We don't want this stock to be trading in the penny territory, in the penny stock territory. Okay, and then the final thing, the last paragraph I highlighted here. This really has nothing to do with us. So GreenPower plans to sell common shares for proceeds up to $500,000 to company executive chairman and executive officer Fraser Atkinson at a price per share equal to the price to the public. So that really has nothing to do with us. That is additional stocks being offered to the executive team, but it does add more dilution. So there you go, $500,000 worth of additional dilution to the stock. They're going to issue more stocks, but that is not to the public. That is to the insiders. But eventually those insiders could sell them. So that is more dilution. Okay, so I just talked about the share dilution. It was what, 1.7 million, right? The 1.5 million plus the additional 225,000. So roughly $1.7 million of additional shares being added to the market. That's the share dilution. And that the executives getting another however many hundreds of thousand shares that is. That's all small dilution. That's nothing compared to the dilution that's coming, in my opinion. And I show you in this slide, this is from their investor presentation. So currently 108,407,000 shares total currently right now. So there is 6.9 million of stock options, 25 million in warrants, and roughly 12 million in additional conversion debentures. So that gives you, if you add that all up, that's 44 million shares. So fully diluted, there'll be 152 million. All right, so how did I get this 44 million shares on the way that I've written there? It's really easy. So, all I did was take the 152 million minus the 108 million. So currently, there's only 108 million shares. After everything is fully diluted, if all the stock options that are out there are executed, all the warrants are executed, and all the convertible notes are executed, you're going to have 152 million shares on the market. And so 108 plus the 44 million, that's how you get the 152 million. So why are these 44 million shares on the way? Why is this massive dilution coming? Look right beneath that 152 million where I've circled. It says note, as of 6/5/2020, number 1, exercisable. So the stock options number one, are exercisable anywhere from 35 cents to 75 cents per share. Number two, exercisable, so the warrants are exercisable anywhere from 50 cents to $1.10. Number three, the convertible notes are exercisable anywhere from 40 cents to 65 cents. So do you know what that means? So people that have these warrants, these convertible notes, they could exercise anywhere from, at the low end, 35 cents, at the high end, $1.10. So when this stock is $3, or if it keeps on going up, $4, $5, people can get this stock, a $5 stock, a $4 stock, whatever it is, they could pay 30 cents and get that stock. That's like 4, 5, 6, 7x their money right there. So, you know, when the stock price keeps on going up, all of these convertible notes, these warrants are going to be executed, and that's why the 44 million shares are going to be added to the market. So that is why I was saying, if the stock price, you know, is under $2, even if there's massive dilution, the stock, I don't think is going to go much further down, you know, probably go 150, 160. So that's why if it's under $2, it was a good time to get in. If it's over $2, definitely. If it's over $3, I would wait until this massive dilution comes, after this 1.7 million shares come onto the market, after this 44 million shares come onto the market, and then reassess the situation, then see where the stock is trading at, because you know, I expect this massive dilution to come, and therefore the stock price is going to come down. So I would wait till the dust clears, everything gets shaken out, and then we'll see where the stock is trading for. Okay, guys, final slide. So this is the same information here. So that 1.5 million shares that we talked about. So they're going to raise $32 million by IPOing in the Nasdaq to the United States market, and they're going to IPO at a price range from $18 to $24. Okay, but wait a minute. What do you mean $18 to $24? Right now it's only $2 and change, under $3, right? So the way they get 18, the way why they're saying the price range is going to be $18 to $24, because this is affecting the reverse stock split price. Remember, when it gets listed on the Nasdaq, it's no longer going to be trading at the penny water territories. It's going to be trading at times 7. So whatever the stock price is right now, multiply by 7. That is what they're going to be trading at after it gets listed on Nasdaq. And so the way they got $18 is basically multiply the current stock price by 7. So if you wanted to know what is the equivalent price before this Nasdaq listing, just divide 18 by 7. That's how I got $2.57. So that's on the low end, and on the high end, $24. Divide that by 7. That's how you get $3.42. So what does that mean? It means basically, if you could get this for under $2.57, you're getting it for a better price than what the price is going to be being listed on the Nasdaq at the IPO price. So under $2.57, again, that is a good price, because when it gets listed on Nasdaq, the lowest price is going to be higher than $2.57, which converted with the 7-to-1 stock split is going to be $18. At the high end, it's going to be $24. So you shouldn't pay more than $3.42 right now if you get into it. If you pay more than $3.42, you're paying higher than what the IPO price is going to be. So I hope that makes sense, guys. I know that's a little confusing with this reverse stock split, the dividing by 7, multiply by 7, but I tried my best to explain it. So I hope you guys found some value. Hope you guys understood. Consider subscribing if you haven't yet already. Give me a thumbs up if you haven't yet. It really helps out the channel. By the way, I'm going to be out for a few days. I'm having some minor surgery, so you won't be seeing some videos from me for a few days. So consider subscribing. It really helps me out. Catch you in the next one. Peace.